Let me change all this stuff. Send out this link real quick. Post it on the post this on the social media real quick. That's so weird. Why did they change all these settings on YouTube? They literally put it back to the old settings. All right, let me get it on the Facebook real quick. One last place is the Instagram. Save this. Hey guys, how's it going? I'm posting all the links to the social media real quick. Once this is all done, we can get started. So if you guys have any questions, feel free to put them in the chat. And once we get underway, I can go over any questions you guys have. We don't really have an agenda today aside from going over, any potential trades and also the new US 30 strategy that I've been working on. But today's Thursday, so the market's like pretty slow. So we have a lot of time to go over any questions. If you guys have any specific questions, or if you guys want me to cover anything specific. So feel free to ask any questions you guys want. We'll try to keep the webinar going. I mean, if there's no questions and there's nothing to really look at, then we might have to end it early. So if you guys have any questions, like, don't be shy, just ask any question you guys have. We'll see how much we can cover by today. The market's just going to move pretty slow because a lot of people are pulling out for the weekend. And also because the elections are coming up pretty soon. So we still have a couple trades running. This is the US 30 that we have from earlier. A lot of people actually got out already when it came down. But this wasn't even the entry. Yeah, when it came down earlier, a lot of people actually pulled out. I think it was like on this candle right here. But why is it so? It's so weird. It's like way over here. Let me move this over. Yeah, so the entry was taken right there, and when it dropped like about 1,000 pips or so, yeah, it dropped a little more, probably like 1,400 or 1,500 pips. When that happened, a lot of people moved their stop loss to TP1. They got out, but a lot of people are still in, and it's fine because you can see here. Obviously, it's in a downtrend. It's super strong. Just by looking at it, it's clearly in a downtrend, and it looks like it's going to continue down further. So if you guys are still in the trade, I think it's completely fine. See, it looks like it's going to continue down some more. I'm still in the trade too. I've been scalping within it, so every time it dropped, I collected profits. So I'm pretty much fine at this point. I pretty much made my profit, but if it does come down further, I mean, even better. But it still looks fine. So if you guys are still in US 30, don't get too worried, but we just got to give it time. Hopefully it'll drop by like London session, but I'll go over the strategy and I'll show you guys why we took that trade, because I haven't gone over that yet. I showed you guys some of the so Roscoe's asking when our strategy must have missed it, please explain. So Roscoe, I sent that in the chat yesterday. I don't know if you're in the premium, or I sent it in the public too. In the group, I sent here the sneak peek of the strategy that I was applying. So I was like right here, sneak peek at the new K2 daily US 30 strategy that I've been working on. And it's basically the same strategy, but it's taken on the 1 hour time frame. And the time frame to enter the trade is between London Open till London Open the next day. So basically midnight my time till midnight the following session, which is a total of 24 hours. I'll go over it in more detail in a little bit once we get fully going. But it's pretty much the same. It's the same concept. It's just done on a higher time frame and on a wider time scale with regard to session. Because on the 10-minute, we usually trade it on the New York session, but for the 1 hour, since it's such a big time frame, you can't really trade it from session to session because the sessions only last about 4 to 6 hours, 8 hours max, you know? So it wouldn't be possible for us to really catch a signal because you can see here, these signals don't come within like, so this signal is right here. The next signal doesn't come until for like a whole 1 day and 15 hours. So that's why it's a little different, but you know, the general idea is pretty much the same exact thing. So let me give it some time because we're still a little early. It's just hitting 4. You know, normally we start at 4. I'm just gonna let more people roll in because I don't want to get started and then everyone's gonna ask the same question once we're into the strategy. So let me just give it a few more minutes, and then once people are in here, then we can get started. And we have a decent amount of people in the room already, but I just want to make sure that everyone's here before we get started. Yeah, Roscoe, it's pretty much the same thing. It's like the 10-minute, except it's on the hour. So we're just multiplying that times 6. And that's why the stop losses were like a lot wider. Normally the stop loss is like 1,500 pips max. This one was 5,000. So that's like, you know, normally times 4, times 5. But I'll go into it in detail. I'll break it down. I'll mark up. So this is what I'll do now. I'll mark the sessions up by midnight or by London Open so that you guys can see which sessions are we taking these trades during. So let's see. Midnight would be right here, right here, and I'm just gonna go back probably a couple of weeks or maybe even just a couple of days because these are a lot of days to cover. Even though it's an easy strategy, there's still a lot of days to cover. So let me go through here. All right, I think that's about it. Well, let me go over a couple more. Let's see. Yeah, so that's fine. Well, I mean, if you guys want more examples, we can keep going through, but it's pretty much the same exact strategy, you know, every day. But okay, so let's get started. So this is the entry that we still have available right now. This is the but like I mentioned before, a lot of people got stopped out in profit. You know, generally, if you're trading something like this that has, you know, such a big trade, it's always a better idea to move your stop loss in profit and to lock in some profit. So today I sent out that trade and I wasn't even going to send out this trade, but Paco asked, so you guys can thank Paco for that. He was asking for the 1 hour entry, and I did see that 1 hour entry, and that's why I called it when I saw it, which was right here. So I called this trade at about 6 a.m. today, Pacific Daylight Savings Time, which is Los Angeles time, and it was right here. Same exact entry, but done right here. So we took it a little later, but same exact thing. So here's the entry here, same entry for FTMO. It's just a little difference because of the different price difference. But yeah, these were my profits from today. So I took that trade right there. Those were the, you know, initial profits. We hit TP1 for 1,000 pips, and those were my profits after we hit TP1. And it's pretty simple. So we'll go over the strategy now. It's pretty much the same thing. Let's see, Kyle said, what lot size do you recommend for FTMO? 100K, account for 5,000 pips. So if you're gonna, I mean, if you ever want to look at it, Kyle, it's real simple. You just gotta open your calculator up, and so if you're taking, we'll just use a 10 lot as a baseline because you can pretty much just change the numbers up depending on how you want to calculate it. So basically, if you're doing a 10 lot, it's going to be 1. That's the multiplier. And then you multiply that by the pips. So it's 5,000 pips. Your risk is going to be 5,000. So that's way too high. You should not be trading a 10 lot. The reason why I traded a 10 lot on this is because I got into the trade earlier. So this was the actual entry, but I got in somewhere around here because price was up here, and that's when I called the trade. But I had so much confidence that it was going to come down that I just entered anyways. So my entry is actually way up here. but this would be the actual entry here. That's why I enter this at a 10 lot. However, if you're trading it on this full move, then it shouldn't be a 10 lot because your risk is going to be $5,000, and that's going to be your max daily loss. So if you reach this point with your max daily loss, you're going to lose your FTMO account. So don't do a standard lot. I'm not standard lot, a 10 lot. So a standard lot, if you're trading on a normal broker versus a 10 lot, which is the equivalent on FTMO. So this is what your risk would be. So generally that's way too high. So instead of using 10 lot, you can probably use like an 8 lot. So if you're doing an 8 lot, that'd be 80 cents times 5,000 pips. Your risk would be 4,000. Although still very high, it's fine because you're not going to reach that daily loss. But you should probably go even lower, because the thing is, if you're down in the whole 4,000 bucks, you only have 6,000 bucks left until you get kicked out of that challenge. So maybe even lower. So you should probably be in between a 5 and an 8 lot. So if you do a 5 lot, it's 50 cents times, 50 cents times 5,000 pips. So your profit risk would be 2,500. That's perfectly fine. So, depending on how confident you are with the trade, I know you just got back into it, Kyle. So, maybe you should start at a 5 lot if you're going to be risking that much. So this is pretty much how you would calculate it. You would just, if you're doing a 10 lot, that's going to be a 1 multiplier. If you're doing a 5 lot, that's going to be a 0.50. Basically what you're doing is you're just moving the decimal over by 1. So normally if you're trading, on a normal broker, a 5 lot is going to be a big position size. However, since FTMO values it a little differently, you just move the decimal over. So instead of a 5, it's going to be a 50 because you just move that decimal over by 1. So this would be a 5 lot. You just multiply it by how many pips you're trying to reach. If it's 5,000, if it's 2,000, doesn't really matter. You just input the numbers. If it's 2,000, you hit enter, and your risk is going to be 1,000. So, short answer to your question, it'd probably be, yeah, exactly. So Kyle said 5 would be 2,500 if it hits stop loss. That's correct. So that's pretty much how you would calculate it. And you generally want to keep your risk, well below the max loss for the day, because that way it'd make it virtually impossible for you to fail your challenge. Yeah, no problem. I know it's a little confusing at first. A lot of people don't get it, but once you actually do it, and I explain it to you guys more in detail, it's pretty simple. And that goes for everyone, because I know a lot of people ask me, what lot size should they be using for FTMO, and it's real simple. If you want to figure it out yourself, you just multiply it by whatever lot size you're doing. So if you're doing a 1 lot, it's going to be 10 cents, and then you'll multiply that by how many pips you're looking to risk, and it's 500 right there. John said, at 5 lots, how many consecutive losses can you take before getting kicked out of FTMO? So that would depend on your risk. So, this was a 5,000 pip risk. This is going to be totally different from, say, tomorrow's trade, because the swing is probably not going to be this wide. Normally, it's not this wide. This is a very wide stop loss. Generally, it's going to be about 2,000 pips to maybe 4,000 pips max. But 5,000 pips is a big this is a big stop loss. Even Wade reached out to me. He's like, hey bro, 5,000 pips is a lot. And I was like, I know, I didn't really think about it when I called it, but that was where the swing was. And thankfully that's where we put it, because, if it was anywhere shorter, we would have gone stopped out. However, we didn't get stopped out. It came right back down, and I'm anticipating it to continue down further. But short answer to your question, John, it's going to depend on the trade. If your trade is 2,000 pips and your risk, it depends on how much you're risking per trade. If you're risking 2,500 per trade, obviously you're going to have to lose 5 times before you get kicked out of FTMO, because 2,500 times 5, that's even more. So 2,500 times 4, that'd be 4 back-to-back losses. That'd be 10,000, right? That's going to be your max limit loss. So you can only lose this much during a challenge, 10,000. So if you have 4 back-to-back losses, that's going to be the kicker. So if that happens, you should probably use smaller lot sizes. So depending on, how confident you are with your trades, maybe you shouldn't take a 5 lot. Maybe you should take something smaller. It just really depends, because your lot size is going to reflect on your profit loss, or your profit risk, because it doesn't matter if you're doing a 5 lot, so 0.50, and your your stop loss is 1,500 pips. You're only going to risk 750. That's going to make a huge difference versus trading, a 5 lot times a 5,000. You're going to be risking 2,500. So there's no specific 5 lot trades that you're going to take. It depends on your stop loss. The bigger your stop loss, the bigger your loss. The smaller your stop loss, the smaller the loss. So that's how you would calculate it. There's no set there's no set numbers of losses you can take because depending on which strategy you're applying. If you're applying the 1 hour, the swing is always going to be different. So like for example here, we had a sell right here, right? The swing is super tight. So if you look right here, the swing is only about 1,000 pips. We probably would have bumped that up to a minimum of 2,000. That's what I've been doing in my testing versus today's entry. So today's entry right here, the swing was 5,000 pips. So that's what I mean by it's going to be totally different depending on the trade because not every trade is going to be the same. So I'll show you guys another example here. So right here is another sell, right? The swing right here is about 3,000 pips. We're going to round that up to 4,000. So you can see here that 3 back-to-back days are totally different. One is going to be 4,000 pip risk. This is going to be a 2,000 pip risk, and today's is going to be a 5,000 pip risk. So it's a huge difference between each trade, and your lot size is going to vary by each trade. You're not going to use a 5 lot for every single trade. Like there's not going to be no set lot size. You're going to have to figure that out per trade because a 2,000 risk versus a 5,000 risk is a huge difference. But yeah, so Kyle's asking, and US 30 is still live? Yeah, so we're still in this trade right now. I'm currently in the trade as well. I was scalping within, so I pretty much made my profit to cover, whatever risk that I have within this trade, but I don't mind doubling it up. So I still have my trade active and I'll probably just hang on to it because I do anticipate it to come down further. Like I mentioned earlier, it's in a strong downtrend right here, like super strong downtrend. I mean, what could happen here is it could probably come up, reject off the pivot, and then come crashing down. There's a ton of different scenarios here, but with the elections coming up, I don't anticipate it to come up anytime soon. Let me see if there's any zones that are nearby. Yeah, so it rejected off this point right here. And that's a pretty strong zone. So it's tested at 1, 2, 3 to triple top right here, right? Tested it right here, came down, break and retest. Second test, third test, heavy drop coming or like oncoming. That's what I see happening right there. So it's still active. I'm going to keep holding it because I think it's going to continue. But I mean, we'll just have to wait and see what happens. But okay, so I'll go over the strategy now so that you guys can see why I took that trade. And it's super simple. It's like, but just keep in mind that this isn't the final product. I'm still testing this. I literally just thought of this yesterday. So I've been staring at the charts and I saw that there's a pattern there where it keeps repeating itself. So, identified that pattern. And one day I created this strategy. I'm always looking for solutions for us to make more profit. I could have kept this to myself. I didn't need to share it with you guys, but it was a fun in that. So let's see. I'm gonna break down the requirements here. Super simple. So this is going to be the K² daily US 30 strategy, 1 hour time frame. So it's the same exact thing. So basically what we're going to do is we're going to look, or I'll simplify it. Look for entries after 12 a.m. Pacific Daylight Savings Time, which is London open for me, and then take or first identify the first valid K² signal, and then enter on the open of the following candle. And this is where it's going to vary. Well, all of these requirements are going to be varied. Like I'm still doing the testing, guys. So all of this stuff is not official yet. I'm just going to show you guys what I've been using to back test it. But obviously I need to do my own back testing, figure out, what the win-loss ratio is. And then from there, I'm going to figure out my my different solutions to fix those little changes. Let me see if I have them here. So I do have I have some data right here. So I've been testing this. I tested it yesterday for the past 2 months. The thing with the past 2 months is that it's these were bad months for US 30 because as we're getting close to elections, obviously if you look at the market here, US 30 has not been moving smoothly at all. Generally it moves directional. So if I back it up right here, you can see right here from, let me go a little farther back. So like right here, so like August, see like August and September, or maybe not September, but just August and July, you can see that it generally just goes straight up, right? So that's why a lot of people just buy the dip. So they see the dip, they buy it, and then they ride it up. They see the dip, they buy it, they ride it up. Same thing over and over again. See, it's like straight up, right? But with September, see how much whipsawing there was going on here? It dropped, came up, dropped, came up, dropped, and it literally just went sideways and it was doing whatever it wanted to do. So the thing with the samples that I took for September and October, they're not good samples. That's why I need to go back farther and I need to test this strategy all the way from January till today and then go farther years back to get more and more data. Because the more data we have, the more accurate the strategy will be. Because then I can make tweaks and then make sure that the strategy is going to be 100% before I actually release it to you guys. But so far it's been working pretty decent. So even like during like these bad months, here's the back test that I did for this strategy for just October and September. So for October, there were a total of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. There was like about, and the month isn't even done yet. So there was like 13 entries. There were, and then at the end there was 5. It was a positive 5 wins because I calculated everything from the wins and the losses for a total of 13,000 pips. That's not bad at all. Like, monthly, this could make you a lot of money because, if you're taking a mini lot, that's like 13,000, just like setting and forgetting these trades. These aren't even moving it, like not even moving your stop loss at all. This is just letting it run, like, setting and forgetting it. Basically, you see the entry, you take the entry, and then you let it run. So from that back test, there was a 70% win rate, 9 wins, 4 losses for a gain of 13,000 pips and a total of 5 wins. It's if you take every trade. You can see here that there's not trades every single day. Like on some days on the 5th, there was no entry, 7th, no entry, 9th through 13th, no entry. September was even a worse month overall, but the win rate was still above 50%. So right here, the total profit loss was 10,000 pips. After all the wins and losses, there was 11 wins, 9 losses. There was a total of 2 positive wins overall for a 55% win rate. So the thing is, if your win rate is above 50% and you just take every single trade, you're going to be in profit regardless. Like right here, if you add these 2 up, that's a lot of profit for 2 months, depending on what lot size you're taking. Obviously, if you're taking, micro lot, you're going to have like, let's see, 13. I'm trying to think how much so this would be like 1,300 profit on the smallest lot size. If you're taking a mini, this would be 13,000. You add these both together, within 2 months, you would have made 23,000. That's more than what a lot of people make monthly. And there's like no guesswork here. You literally take it, you set it, and you don't even touch it. The thing is, if you were adjusting your stop loss, like for these losses right here, if you adjusted your stop loss, then you probably would have had no losses. But the thing is, I'm trying to set this up where you can just set it and forget it. The thing also is that there was news during these days. So I disregarded news. So the thing is, if we factored in news as well, we probably could have avoided these losses. However, I'm trying to get raw data right now. Once I get the raw data, I can go and make changes to increase this win rate. But overall, this is a great win rate during like 2, whatever months. I can't even imagine what will happen once you do August and we do July. Like the other months where they were super bullish, like July, August. Once I have that data and I show you guys what the results are, the raw data without having, any tweaks to the strategy, it's probably going to be like crazy. But, we'll get to that at another time. But I'll just go over here and I'll show you guys how the strategy works before we move any forward. But yeah, keep in mind that this isn't the final strategy. So don't go and use the strategy yet because it hasn't been confirmed. I've only done so much testing on it where I know what the bare bones basic of like what it can produce. But if it produced this much during these like, off months, then you can only imagine how well was it doing on good months. But okay, so let me go back here. Look for entries after 12 a.m., which is London open. Identify the first valid K2 signal. Enter on the open of the following candle. So those are the first three entries. I mean, the first three requirements. The last requirement is going to be place stop loss at previous swing. Round up to nearest thousand, minimum 2,000 pips. So that's pretty much it, guys. It's super simple. Look for entries after 12 a.m. Identify the first valid K2 signal. Enter on the open of the following candle, and then you'll place your stop loss at the previous swing. You'll round it to the nearest 1,000, and the minimum is 2,000 pips. So let me show you guys here what I mean by that. So I'm going to skip this one because this one came kind of late. I noticed from the data here that when the trades come a little late, like 11 p.m., that's when they hit stop loss. So I haven't figured out if I'm going to take late trades like this, because generally when it moves from another session, it generally goes in the opposite direction. But let's skip this day and I'll start from right here. So basically right here, so over here, you're going to look for entries after 12 a.m. This is going to be 12 a.m. on October 27, 2020. Identify the first valid K2 signal. Right here, we have a valid sell signal, right, at 5 a.m. So next thing you do is enter on the open of the following candle. So right here, we enter a short position. You put your stop loss at the previous swing. This would be the swing right here, but it's too close. It's only about 1,150 pips. So we're going to set that to the minimum of 2,000. So once you have that set up right there, like I mentioned, it's a set and forget type thing. So you set it, you let it run, full TP. You would have gained 2,000 pips right there within 1, 2, 3, 4, about 5 hours. So on the 27th, that'd be a straight win right there, no drawdown. And then we go back to this right here. See, this is another one where it gets kind of close. That's why I have to do some data research, because the thing is, like, this came early and it went straight to full TP. The thing with this is that it carried on to the next session. So when it carries on to the next session, it usually goes in the opposite direction. So right here, it comes up, it comes down, then it comes up, we get that signal, but then once it moves into the next day, it ends up going opposite. And you can see that pattern replay itself through other sessions here, like what happened here yesterday. It's the same exact pattern. Price came down, then it came up. We had this buy signal, but it was so close to the next session. As soon as we enter the next session, it went the opposite direction. So I need to go and do some back testing on that, because obviously these two would have been losses if these were taken. But let's keep going back further. So here's another one right here. This would be, it seems like this strategy works best during mid-session. So like that last one over here, that was like mid-session. Right here again, it's mid-session. So we look for entries after 12 a.m. Identify the first valid K2 signal. We have a sell signal right here. Enter on the open of the following candle. So right here, we enter a short position. Place your stop loss at the previous swing. It should be somewhere around here. It's at about 3,260 pips. Then you round it to the nearest 1,000. So we'll just round it up, because that's why I said here round up to the nearest 1,000. So instead of 3,260, we're gonna round that up to 4,000. And then we let it run. And there you go, full TP. So right here, you can see there was 2 back-to-back wins if you avoided the late trades. So right here was 4,000 pip profit. Again, right here for that 2,000 pip profit as well. So this is what I mean about testing it. I have to make sure that I can figure out what's causing these issues, like what's causing the losses. And that's something that a lot of traders can't do. A lot of traders learn strategy. They don't know how to like make the strategy better. But for me, it's like, I'm super big on accuracy. So I want to have quality trades every time I call a trade or whenever I take a trade. So that's why I'm probably going to avoid these late entries until I figure out, what the issue is. Because I spoke with, Mark. Mark said it's better to enter during New York session, which I could see that because right here, this happened up at 6 a.m. This was in New York session open at 5:30. Again, right here, this entry happened at 10 a.m., which was New York session as well. This loss right here happened during Asia session. And then same situation with this one over here. So maybe it's something that we should take into consideration to maybe avoid trades during Asia session. But like I mentioned, I'm still doing this testing. So once I'm done with the testing, then I can help you guys out with, figuring out what can we do different to make sure that we don't, suffer any losses or many losses at that. But here's one that contradicts what I just said. So like right here, I was saying to avoid the late entries. Right here, there was another late entry, but this late entry would have hit TP. See, if we took this late entry here, it would have hit TP again right there as well. But like I mentioned, there's a give or like you have to give and take here. Like you can't have it all. You either you take every single trade, even if it happens late, and then you risk the opportunity of losing. But if you take every single trade, it'll balance out, kind of like what the data I did here. Because I'm doing the back test on October here for you guys, just to show you guys how it works. But I've already done the back test here, so I already know where the wins and losses come up. And obviously here, if you took every single trade, it would still end up in profit at the end of the month. So it really depends on you as a trader, if you're able to eat these losses to come up at the end of the month. But I know a lot of people here don't have like huge accounts, so you guys might not have the capital to eat any of these losses before making it to this down here. But I mean, that's something that we'll have to cover at some other time. Obviously US 30 is not for small accounts. So that's why I'm not too worried about these like sudden losses that happen here every once in a while, because generally these losses don't happen back to like more than twice. Like you can see right here, they're kind of spread out. But like right here, it's only like two back-to-back and two back-to-back wins, then a loss and a win, but it's a big win, loss, win. There's never like more than two back-to-back losses. So if that happens, then you should be perfectly fine, especially if you're doing FTMO, because this risk isn't going to blow your account unless you're over leveraging. But the main thing that we always teach is risk management. Risk management is going to be the most important thing when trading. Trading in general, but FTMO especially, because if you don't use proper risk management, you could easily blow your account or lose your challenge with one or two trades if you over leverage. But yeah, so that's a basic breakdown of how the strategy works. I already have the data here, so there's really no point in me going back and back testing everything, but I just wanted to show you guys how it worked. But this is the bare basic breakdown of the strategy. So like I mentioned, I just created the strategy like an hour yesterday. So yesterday I was literally just going through the chart and I saw this pattern. So that's how I created that strategy within an hour. But the thing is, I have to go back and back test months and months of data in order to get a better understanding as to how to fix these losses. Because there's always a solution, guys. Like if there's a loss there and you guys go on and analyze the trade, there's going to be a solution as to why that lost. And that's something a lot of traders can't do, and in order to survive in trading, you have to understand how to fix these losses. So that's what I'm going to be doing probably for the next month or so. I'm going to figure out how to prevent these losses. Maybe we should just skip certain trades during certain times, or maybe we should, minimize risk, or there's a ton of different things that can be changed in order for us to better the strategy. Like one thing that I started to mark up was the trend. You can see here that in some situations, if the trend doesn't match, then it generally will affect the trade. But we'll just have to do a risk analysis to see if it's better to avoid trades that are against the trend, or if we should just take them and eat those losses when they come. Because obviously, it's inevitable. There's losses come and go, but it's really up to you as a trader to, determine your risk. Are you able to eat those losses and then make it up later on, or do you want to just skip those trades and avoid losses, but also miss a couple of wins along the way? But yeah, guys, so that's basically the new strategy that I'm developing right now. It's pretty much the same thing. I just need to figure out what the sweet spot is. Similar with the stop loss. So like the stop loss thing that I was talking about, a lot of people are saying the stop loss is just too wide. And I agree. 4,000 pips is a big stop loss, or 5,000 pips is a big stop loss. But, this specific strategy isn't meant for small accounts. So this specific strategy, the 1 hour, is not going to work for everyone. If this doesn't work for you, then just stick to the 10-minute. Because if we look at the 10-minute strategy, so I'll let me just copy this. I'll show you guys the 10-minute, because we had a 10-minute entry today, but I didn't call it because it was opposite of our trade. So we took a sell here, right? And here's the 10-minute strategy. So I'm just going to put the sorry, let me copy this. So I want to type it up. So let me put it over here. I'll show you guys what the 10-minute strategy is for the new people here. Because if you guys have been here for a while, you guys already know what the strategy is. It's the same strategy we've been applying for the past, what is it, like 5, 6 months now. So for all of the US 30 results that we have here, put this up. For all of the US 30 results that we have posted right here, these are all from using the same strategy. We've been using the 10-minute strategy for all of these right here. So all of these wins and losses are from the 10-minute strategy. The 1 hour strategy is just a little different. This is mostly meant for me and like for some FTMO traders, because it's a lot easier if we can just set and forget it, right? But if you have a smaller account, you can do it on a 10-minute. So this is pretty much the same strategy, but on the 10-minute time frame with different requirements, because it's so much shorter than the other one. So this is the K² US 30 strategy, 10-minute. Look for entries after, and the timing is going to be different too, because it's on a shorter time frame. So it's going to be 6:30 a.m. New York Stock Exchange open. First valid signal, enter on the open of the falling candle, place stop loss at TP at 1500 pips. So this is probably a lot easier for a lot of you guys who haven't been around for a bit, or if you guys have been around for a bit, this is probably the easier strategy for you guys to learn. So basically right here, it's the same thing, but we're looking for entries after 6:30 a.m. Pacific Daylight Savings Time. So right here is 6:30 a.m. This is when the New York Stock Exchange opened. And once this happens, we can start looking for trades. So after this happens, every candle after it, when a signal comes up, like a valid signal like this, then you're good to go. So right here, we have a valid buy signal. We would have taken a long position right here, because you enter on the open of the falling candle, place stop loss TP at 1500 pips. We have that set up right there, and then you let it run. And there you go, it hit full TP. So if you guys applied this strategy, I know there's a few guys that applied it. The reason why I didn't call it is because it was going against our current trade. Obviously, I don't want to send out conflicting trades, because people are going to be like, why'd you send out a sell? And then why'd you send out a buy right after? Some people do that, and it just doesn't make any sense, because people end up on the opposite sides of the trade, and people are going to be confused as to, what direction we're really pushing for, because some people are going to be wanting a buy while other people are wanting a sell. So that's why I didn't call this trade. But if you did take the trade on your own, which, you have access to it, for the people here who have access to the K2 strategies and the K2 indicators, you could have done this yourself. And a lot of people did do it themselves. And that would have hit full TP right there. So if you did both, you could have hit TP on this right here at TP1 for 1,000 pips, and then you could have hit full TP here as well for another 1,500 pips. So you would have had a total of 2,500 pips for the day. But yeah, there's a ton of options that you guys can take, but currently I'm still on the 1 hour trade right here. So I'm still hoping that it comes back down, but we'll just have to wait and see how that plays out within the next couple hours. Let me see if there's any news coming up, something that could affect the market at all. So nothing else for Thursday. However, it is Thursday, so a lot of people are pulled out of the market. See if there's any news that came out recently. Lockdown 2.0 reveals COVID-19 failures. See, this is what I don't get. There was like bad COVID news. Like there was literally a ton of bad news today, but for whatever reason, US 30 decided to shoot up. But I don't see it pushing up for too long, because we do have elections coming up next week. So with that said, a lot of people are going to pull out of the market, or a lot of people are going to short US 30, because there's a lot of uncertainty as who's going to be, the president come next week. Because it's a pretty close race. A lot of people think it's one-sided, but me personally, from all the news I've been seeing, it seems like a pretty close race overall. Let's see. So velocity said at 5 lots, which is 5.0 per pip at, yeah, velocity is different. FTMO and because FTMO measures them as I think mini lots or micro lots, so you just move the decimal over. So a 5 lot for a normal broker is technically going to be a mini lot for a normal broker when you're comparing it to FTMO. So it's a little bit different, but it's not that complicated. Velocity said, so it's still 1 entry for the day after London session. Velocity, you just get here because I went over this like for the past like 40 minutes, but I'll just, yeah, so it's going to be different. So here's the requirements for the 1 hour strategy. Basically you're going to look for entries after London Open because it's a 24-hour session from London Open to London Open. And then same requirements. You look for the first valid K2 signal, you enter on the open of the falling candle, and then you place a stop loss at the previous swing. But I don't recommend you apply the strategy yet because I'm not done testing it. This isn't the strategy yet. This is the bare bone raw strategy that I just created within an hour. So there's still a lot of work to do. So I don't recommend that you even think about trying the strategy yet. I mean, I've done back tests and it works fine. Like looking at the back test here, it still provides like a 70% win rate for October. And the month isn't done yet. So if we have more wins down here, this win rate might go up to 75%. But this is not something that I recommend you use because it's not an official strategy yet. So don't get any ideas just yet. I mean, a lot of you guys want to hop on the strategy right away, but the strategy is not done yet. So don't start applying it, or you can apply it, but don't come crying and, complaining that it didn't work, because the thing is that strategy is not a strategy yet. It's just an idea at this point. Until I figured everything out and release it as an official strategy, then you guys can start using it. But I don't recommend you guys use it yet unless you guys know how to troubleshoot. If you guys know how to figure out things and understand how to make a strategy better, then yeah, go ahead and try it. But this strategy isn't the official strategy yet. So I don't expect any of you guys to start applying this. This is just a preview of what's to come. And you need a big account to trade this as well. So if you have anything smaller than, well, I take that back. Depends on your broker. So if your broker allows you to, risk this much 5,000 pips on your account with however much capital you have, then yeah, go ahead and take it. But if you're trading on Hugo's Way or you're trading on one of the normal brokers that most people use, you're not going to be able to trade this with $100. You're not going to be able to trade this with $1,000. You're going to need a lot more money to trade this on the 1 hour time frame. So just stick to the 1 hour. I mean, the 10-minute strategy if you guys have small accounts, because I saw a lot of people today that had some blown accounts because they were either over leveraging or they just weren't doing it properly. Like they could move their stop loss and profit because TP1 was like somewhere over here. And there was so much opportunity for people to move their stop loss and profit, but they didn't. And, that's a mistake on their part. So unless you have a decently sized account, I don't recommend trading this on the 1 hour, unless your broker allows for you to, take on this much risk with that specific lot size. But yeah, so that's it for that strategy right now. I'm not going to keep going over it because I know the more I go over it, the more people are going to want to use it. And the strategy is not done yet. So it's not ready to be used. I don't recommend anyone use it yet. If you want to try it out and if you want to practice it, go ahead. But I wouldn't do it live until everything's been sorted out, because this is the main thing right here, the stop loss area. This is going to be the main thing, because depending on where a stop loss is placed, it's going to make a huge difference with regard to our risk, because a lot of people don't even know how to calculate their risk, like their lot size. Everyone's like messaging me asking me what their lot size should be. If you guys can't figure out your own lot size, then you're not ready to take the trade. That's probably something that you should focus on first, figuring out what lot size to use, because it's not that hard. If you guys go back and rewind this webinar, I explained how to calculate, your risk for the trade with regard to your lot size on FTMO. So if you guys don't understand how to calculate your own lot size already, go back and watch that, understand how to do it, and then you can be ready to take these trades. Because the thing is, I don't want you guys to take big lot sizes, and then you guys fail FTMO because you guys made the mistake of taking too big of a lot size. Especially with US 30, you know, US 30 is a super risky asset to trade. So I'd probably hold off on this for now. Just stick with the 10-minute because the 1500 pip stop loss isn't going to hurt you as much as a 5000 pip stop loss. But yeah, so that's it for this right now. I'm probably going to go back to the normal Forex pairs. If you guys have any other questions about the strategy or about anything else, feel free to put it in the chat. Because like I mentioned, today's Thursday, so the market's really slow. And we're probably not going to see very many entries by the end of today, especially because there's some news tomorrow morning. Let's see. Yeah, we have news at 1 a.m. So there's probably not going to be another signal called off the next 4-hour candle because the next 4-hour candle closes at 10 p.m. and that's about 4 hours from, you know, the news. So there's CHF news at 1, there's Euro news at 2, there's Canadian news at 5:30, and then again at 5:30 there's a bunch of US news. So tomorrow's a heavy news day. So we're probably not even going to trade tomorrow, guys. Just a heads up. You know, if there's entries at 6 p.m., which is the next 4-hour candle close, that'll probably be the last entry for this week for Forex. We'll probably keep on trading US 30 up until tomorrow. Maybe we might take, you know, that last 10-minute trade. Otherwise, we're probably going to sit out the rest of the week because there's a ton of news tomorrow. And this is like something that you guys don't want to get caught in because you guys don't want to enter a trade and then it ends up reversing on you, you know, as soon as you guys enter the trade. So just keep that in mind. But for now, I'm going to go and go over each pair. I'm going to see if there's any entries coming up with the next 4-hour candle close. So let's do that first. Odd CAD right here. This is one of our active trades. I'm in some heavy drawdown right now. Yeah, it took about a standard lot, 1.2 or 1.3 basically. And it just pulled back a little bit, but I still anticipate it to come down. So if I turn on the pivots, price is still below the pivot. So it's still, you know, transitioning to a downtrend. The trend meter is neutral. It's going from green to blue. So it's obviously making its way downwards. So this looks okay for now. However, I mean, we'll see. It looks like all of the Aussie pairs are starting to push up a little bit. But it's because we're in the Asia session. So generally during this time, it usually pushes up a bit. And then once we get closer to London, it'll just dump down. So I'm not too worried about this right now. It's going to move slow during Asia session. So, and if it does push up, it's going to push up to this zone right here. So if it does, it'll probably push up to the zone, reject off it, and then come straight back down. Kind of similar to what happened here. Price comes up, it attempts to test the zone, and then it comes shooting back down. So I'm not too worried about this. I'll probably hold off on that for a little bit and come back and look at it a little later. But let's go back to odd CHF. So this right here has a buy signal. Oh, I think there's Aussie news right now, right? So that's probably what pushed price up. So there's news right now actually for the Aussie. So these news events are probably pushing price up slightly, but I think it's going to come crashing right back down. If you guys aren't aware, the Australia is in a recession. Like they're officially in a recession. So I don't see this currency, you know, recovering anytime soon. It might recover slightly, but overall, it's going to keep coming down. It's in a strong downtrend. You know, you don't expect the currency to pull like way up while it's in a recession, unless it breaks out of the recession, which I don't see happening because COVID is still going on right now. So that's odd CAD, one of our active trades right now. Odd CHF, looks like we have a buy signal there, but it's going to get close to this zone. It's only about 10 pips away. So if that happens, it's probably going to push up, hit this zone, and then reject right off it. That's odd CHF right there. Odd JPY, it still has a sell signal right here. There's no buy signal, so it still has a sell bias. You know, probably what's going to happen here, it's going to do the same thing as every other pair. It's probably going to come up, reject off the zone, and come shooting right back down. So that's it for odd JPY. But there's no entry right now. So it's not something that I really want to look at. Odd NZD right here. It's in a super strong downtrend, just like all the other Aussie pairs. So just looking at it right there, it's still coming down. But right now, currently, it's within the zone. So as it's inside the zone, it's not something that I would want to take. I'd want it to break below the zone and then take a short position when it breaks down there. So we have confirmation that it's going to continue down. But since there's nothing there right now, I'm just going to avoid that. Sure, no problem, Kyle. Glad to have you back, bro. It's been a while. Time to make all that profit back. Let's see, AUD/USD. So right here we have same situation. So if you look at all of the Aussie pairs, they all have like this random spike in price right here, and it looks like it's due to this news event that just happened just now. So what I see happening here is I see all of the Aussie pairs having that like random momentum swing up, like a very short momentum swing, but then I see it coming crashing right back down because the Aussie is weak overall. So it just shows that the strong push right here. Let me see if I can refresh this. I don't know if the actual data was released yet. Let's see. Yeah, so the data wasn't released yet. It looks like 17:30. I'm trying to think military time. 17:30. That's 5:30. So the news actually isn't out yet. This looks like this is a movement due to this pre-market news. Let me see if there's a rejection off all these other ones. So there's a rejection for AUD/USD off the zone. I don't really see one for AUD/JPY. Let's see if there's another zone down there. Yeah, no, the next zone is way down here. So it's not like a common rejection across the board, but we'll have to just wait and see. There's no point in us really predicting what's going to happen next. We just have to wait and see how the market reacts once it reaches this resistance. So same for this right here, AUD/CAD. We have the resistance right here. We have the resistance right here for AUD/CHF. Pretty much all of the AUD/JPY pairs have a resistance coming up. So what I see happening is price comes up, test the resistance on every single for AUD/CAD, AUD/CHF, AUD/JPY, AUD/USD, and then coming crashing right back down. So that's basically what I'm looking for there, and it'll be perfect for our AUD/CAD because we have a sell position active for that right now as well. Right here for CAD/CHF, we have a buy signal. However, it's too close to this next zone. So even if it does close, it's not really worth taking because the spread's 3 pips. You're gonna have to pay the spread going in. You have to pay the spread going out. So that's 6 pips total, leaving you with no profit potential there. So I'm gonna skip that. CAD/JPY right here. This is an active, well, it's still active, but I think most of us got out of this trade already. So I got out at TP2 down here at like 27 pips, I think. Let's see if I could find it here. CAD/JPY. Yeah, so this was the CAD/JPY signal we sent out. It hit TP1 for 13 pips at 5:30 or about 6, and then again hit TP2 right here for 27 pips. So when this happened right here, I moved my stop loss in profit down there, and then I got stopped out in profit. So I'm out of the trade. That's why I don't have an active trade running right now. But technically it's still active, and it's probably still going to come down. But you guys have to keep in mind that with elections coming up, you guys should always protect your position no matter what. That should be the main goal. I mean, not even during elections, but all the time. Like whenever you're trading, risk management is always going to be number one. You guys should always have that in the back of your mind. And you guys should always understand that it's better to lock in some profit rather than suffer a full loss, because those small profits add up. Like if you guys look at all of the results, I don't have them up right now, but if you guys saw the results for the week, most of them hit full TP. But even if you just took, or even if we go to last week's results. So if I go to last week's results, even though all of them hit full TP, or not all of them, but majority of them, see how many full TPs we had. Even if you just caught TP1 for pretty much all of them and you move your stop loss in profit, you still would have been in profit at the end of the week, regardless. Even with these losses right here, there was only 2 losses for Forex. Even if you took just TP1 for every single trade, you would still have more to cover these losses right here. So it just goes to show that, this is a long-term game. It's not a get-rich-quick scheme. It's a get-rich-long scheme where you get rich long-term, So that's CAD-JPY. We still have that sell right there. And I still anticipate coming down. So if you look at all of the JPY pairs, well, not specifically odd JPY because all of the odds are pushing up currently. But if you look at the other ones like EJ, it's coming down. CHF JPY, it's coming down. GJ, it's coming down. NJ, it's coming down. And UJ, it's coming down. It's coming down for pretty much every pair that's paired with JPY, aside from odd JPY, because the Aussie is just pushing up temporarily right now, like I mentioned, because of the news. It looks like there's JPY news coming up as well. So there's actually a lot of news today. Not that well, it's weird because I didn't see them on Forex Factory. Yeah, man, Forex Factory's got to step up the game. It looks like there's a bunch of news here that I didn't even see because it wasn't on Forex Factory, which it looks like it should have because there's high impact news right here. Unemployment data for JPY. Yeah, I don't know. But like for the Aussie pairs, I do see this as a temporary push up, and I see it dropping probably as we get closer to London. So let me go back to the pairs I was looking at. CAD-JPY here, I think it's going to come down, so don't be too worried if you're still in this trade. But if it does come back down, always remember to move your stop loss and profit to lock in some profits and guarantee no loss on that specific trade. Okay, CHF JPY right here. We have a buy signal right here. However, it looks like a sell signal is forming. So if a sell signal forms and price closes below the zone, then we can take a short position right there. But until that happens, there's going to be no entry. So it's CHF JPY, Euro odd right here. We have a sell signal. It looks like it is starting to trend downwards right here. So if this closes below this zone right here, then we could probably take a short position. However, like I mentioned, it is Thursday, so volatility is probably super low right now. So we would have to just wait to see it. And I don't think it's a trade I would take regardless, because the thing is, it's right here. So if we do take this trade, it's got to break through two different K2SR zones before it hits full TP. And that's just way too risky, because things could come down here, reject right off it, or come down here, reject right off it. There's like too many cautions right there preventing me from wanting to take this trade. But it's something to look out for if you guys are looking at EA. It does look like it's coming down. Euro CAD, nothing there. Euro CHF, doesn't look like there's anything there. Nothing there for EG. It's stuck within the zone. It's pretty much going to consolidate sideways until it breaks out either back up or down. But it looks like it's going to come down. EJ, it's coming down right here. There was an entry right here, but I didn't call it because it was a big drop. So whenever a big drop like this happens, I usually don't take the trade. So right here was a drop for about 50 pips. The reason why I don't take the trade is because odds are when this happens, it usually pushes up to correct a little bit before coming back down. So sometimes you'll see that I'll call late entries, because what I'm doing is I'm waiting for price to come up, and then I have a sell stop right here so we catch it as it comes back down. However, for this specific trade, it just continued down. But I don't know how long this drop is going to happen until it has that, little retracement that's due at some point. EN right here. Actually, this trade's still, we hit TV2 down here for 50 pips. That's when I got out. That's why I don't have an active trade right now. But it's still technically active if you guys have that trade still active. So let me go over to Euro NZD. Yeah, so you can see here, this is the signal that I called on 27th, 2 days ago, 10 a.m. Signal right there, same exact entry right here. And then we hit TP1 for 25 pips, and then again TP2 for 50 pips. So when this happened, I moved my stop loss and profit, somewhere around here. And then as it came down and it pulled right back, I got stopped out in profit. So that's perfectly fine. But it's still technically active. You guys have it active right now. Euro USD, this would have been an entry right here, but it's the same situation that I mentioned for, I think, EA. Like I mentioned, when it has a big drop like this, which this dropped about, it dropped a lot, like 60 pips. So when it has a big drop like that, I always anticipate it to retrace up a little bit before coming back down. So if I do want to call late entry for this, I can, and it would be a sell stop right here. So as price pushes up further, when it comes back down, it'll fill it and then go straight to our TP. But I'll have to figure that out if I want to call that or not. I'll just mark this with a highlighter just in case I want to call that a little later. GA right here, there's no entry. It's stuck within the zone. So in order for us to take this trade, price would have to come way down here, or even better, way down here. Because the thing is, I don't want to take a trade within the zone here, because if we take a sell and it breaks below here, it can reject right here. Or if it comes down here, it can reject off here. Same situation down here, it can reject off here. So that's why I would wait for it to enter some sort of open space. Like this is a decent open space right here because it's about 53 pips. That's enough space for you to take profit. But over here, even better. From this zone to this zone, it's like 120 pips. All right, GBP CAD right here, nothing there, stuck within that zone. GC right here, technically this would be a decent buy entry right here because it's probably gonna push up and test the zone like it did over here. Price broke it, tested the zone, came back down. Price broke it, tested the zone, came right back down. Right here, if it breaks above it, it's probably gonna test the zone again. However, let's see how much space is here. So even if it closes above here, it would only provide for about a 30 pip move, which I mean is fine, but it's still a risky trade. Something I probably wouldn't call because I'm not going to risk X amount of money just to catch this little move right here. GJ right here, if it closes below the zone, or I mean, it could even provide for a small entry, right? A late entry over here, but it's going to reach this next zone, which is just too risky because if it comes down right here, like I mentioned before, it could probably reject right off it. So it's probably not a risk that I would be willing to take. But I mean, we'll wait and see how this plays out because I obviously don't want to take any risky trades as we get closer to the end of the week. All right, GN right here, no entry. GU right here, no entry as well. Stuck within the zone. It wouldn't be an entry until price breaks like way down here. NZD CAD, I have this marked up right here for a late entry. Yeah, I don't know. I was thinking about calling it, but the thing is pushing up so strong that I wasn't sure if it was going to keep pushing up. But I was waiting for it to come up, retest the zone for like a break and retest, and then come back down to fill it. But then again, it's too close to the zone right here. So before it hits full TP, it might reject right off it. Too risky. So I'm just going to keep it marked, but I'm not going to call it right now. Right here for NZD CHF, looks like there's nothing there right now. NZD JPY, same situation. There's an entry there. I was going to call late entry, but it just seems a bit risky at this point. So I'm probably not going to call that. NZD USD, nothing there. USD CAD. This could actually be a good entry. Let's see. So the Canadian dollar is gaining strength. I don't know why this thing keeps pushing up. So the Aussie just looks strong, the Aussie on its own, but the Canadian dollar right here is pretty strong too. So comparing this, like USD CAD's coming down, Euro CAD's coming down, CAD CHF's going up, CAD JPY is going up. So this is indicating that the Canadian dollar is strong because right here it's coming down as well. So this might give confirmation for this to actually come down. But it's even more prevalent right here on the USD CAD. So right here, if it closes below, I'll probably call a short position right here. And then we can give this a go. But this candle is not going to close until 6. So we still have like an hour left. But we'll just have to wait and see how that plays out. USD CHF, no entry there. And UJ right here. So this hit TP2 way down here for about 25 pips. I think we call that over here. USD JPY, yeah. So it hit TP2 for 25 pips right there. And it looks like it's coming back down. Like I mentioned before, the JPYs look like they're coming down. But we'll just have to wait and see how things play out. It's still an active trade if you guys have it active, so I do see it coming down. But I do recommend once it comes into profit, move your stop loss in profit to guarantee your position and take away all risk. But yeah, guys, I think that's it. I don't really see anything else worth taking right now. We still have an hour left until the next candle close, but the market's pretty slow overall. Due to it being Thursday, a lot of people are pulling out of the market already because we're getting closer to the weekend for market close. So if you guys have any other questions, feel free to put it in the chat right now. Otherwise, I'm probably going to cut this webinar a little short because we don't have any other questions. Plus, the market's just too slow for us to really identify any other entries. If you guys are just getting into the chat, earlier on, I went over the new US 30 strategy. So if you guys want to look at that, just go ahead and rewind the webinar to the beginning. And I pretty much go over the strategy in detail here. And I also explain how to calculate your FTMO lot size. I don't mind when people ask me for the FTMO lot size, but I think that you guys should know on your own because I'm not going to be there 100% to answer all your questions at all times because, there's a ton of other people that are asking questions. So the wait list is pretty long when I do get questions on Telegram. And that's the reason why I kind of take a while to respond to you because there's a bunch of other questions that I have to get to before I can go full circle back to your question. So I think that's about it, guys. Unless you guys have any other questions, feel free to message me on Telegram. I don't see any other questions here on the YouTube. So I'm assuming you guys are all good with questions for now. But if you guys do have a question or something pops up a little later, feel free to message me on Telegram and then I can answer your guys' question there. Until then, I'm going to wait until 6 o'clock for the next 4-hour candle close. And we have a couple trades lined up here. We have one for EU, one for NZD CAD, for a late entry, one for NZD JPY, and one for USD CAD. But if these don't close where they're supposed to close by 6 p.m., we have 59 minutes left, then I'll probably, just skip the trades because there's no reason for taking risky trades right now. All right, we have one question from Sedesma. He wants me to check out GU. So let's pull up GU real quick. It's the same thing I marked up earlier when you went over GU. So GU right here, we have a sell momentum. So we have a sell bias. If you look at the trend, it's obviously trending down right now. So we have a sell bias right now. Also, the trend meter is red down here. So there's so many confirmations that it's going to come down. However, there's too many zones right here. So the thing is, even though it's coming down, even at this current zone where it's at right now, this could probably reject off this zone and come back up. But if it comes down, there's so many areas for rejection. So price can reject from there. Even if it comes down here, price can reject from there as well, because there's not enough space between these zones for us to take a trade. It's a 15 pip gap between these two zones. We have to pay about a 2 or 3 pip spread. I have 1.4, but for most brokers, I'm assuming it's 2 or 3 pips. So you'd have to pay that spread going in and out of the trade. That's about 6 pips. And there's only about a 15 pip gap right here. So if you subtract that from 15, you're only literally going to be able to lock in like 9 pips before it might reject off this point or even this point down here. So it's too risky for us to trade. I would only take this trade if it breaks below the zone down here, because then we have free reign for price to continue further down. So if price does break below here, then I would take a short position right there and then pretty much just ride that down for a 100 pip win. Because you can see right here, this gives enough space for it to reach that far. So same situation right here. Price was in the same area right here where it is currently. Once it broke below this point, you take a short position right here, and then you ride that to full TP. This is obviously too big of a move. I probably just set it to like about 100 pips, like that, and it would have hit full TP right there. Same situation with right here. I'd probably set this to about 100 pips max because the risk above that is just way too high. So if risk was about 100 pips, it gives you a clear move right here to hit full TP. But currently right now, it's stuck between too many zones right here. You can see that it's rejected off this point a bunch of times. Price came down right here, same situation. Like look at the wick. It's done the same thing right here, and it shot right back up. Came back down, tested it, and shot right back up. So that's why I wouldn't risk taking this trade right now, because there's no extra confirmation that it's going to continue down just yet until it breaks way down here. So, this is a game of patience. You just have to wait for that perfect entry. Once you see that entry, then we would take the trade. Because the last thing you want to happen is you enter a trade here for a sell because it looks like such a good sell, and then it reverses right on you because it rejects off this zone and it stops you out. So it's just too risky to take right now, which is why I wouldn't take it. But it's definitely something to look out for. I would have a sell bias because there's so many confirmations indicating that it's going to come down. However, there's so many areas of rejection right here where I wouldn't take it just yet. But yeah, so that's GU. I don't know if there's any other questions. You guys have anything else before I get off? I'll give it a few seconds before we log off for the night and for the week, I guess. But I'll still be available on Telegram if you guys have any other questions. Here's our USD 30. So I'm still waiting on this because I still have this trade active right now as well. So I'm hoping this comes down heavy and hits our full TP because I would like that 5,000 pips. But yeah, guys, thanks for showing up. If you guys are new here, just remember that I have this every Tuesday and Thursday at 4 p.m. We usually go till 6 p.m. and longer, but for some reason today there's just not that many questions. I'm sure a lot of people are just not online because we're getting near the weekend. But if you guys want to, attend the next one, I'll be on again next Tuesday at 4 p.m. I might start changing the time up because a lot of people want me to go up during New York session. So I might start holding these trading webinars in the morning during New York session so I can show you guys some scalp entries live as they appear. Other than that, if you guys are new here and you guys want to sign up to K² to have access to the indicators, I know there's a couple new people here. If you guys want to have access to the indicators so you guys can apply the strategies on your own, just go on our website at k2trades.com right here. This would be our website, k2trades.com. And then once you're there, just scroll down to the bottom, and we still have our trial going on right now. So normally it's $150 a month, but if you want to sign up for the 1 month trial where you have access to the indicators and the K² strategies course, plus the premium webinars, not webinars, the premium groups, it's only $50 for the first month. And then you guys can cancel anytime if you guys change your mind. Odds are you're probably going to keep going because once you start making profit, it's going to cover the subscription easily. But yeah, guys, so if you guys have any other questions, just reach out to me on Telegram. Otherwise, I will catch you guys in the chat. Thanks for showing up, guys, and I'll catch you